Well, good weekend, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up, this is your weekly edition, and it is for Sunday, the 9th of February, Super Bowl Day 2025. I'm putting everything out today earlier than I normally do. As you know, on the weekends, if I do them on Sunday, I like to do them right after the markets open, but I'm going to be watching Super Bowl. We have a house full of a lot of people today. I mean, a lot of people. A real lot of people. So everybody will be watching the game, playing with it, me included. So I figured I'll get this done. So as you know, we've still got inflation running, and that is why we're up so far for the month, up nearly 2% in the gold market. If you're looking at CPI data and the like, all you see is inflation. You just had on Friday the non-farm payroll. You saw wage inflation jumping more than was anticipated in there. These are the problems that the market is facing. You're going to get this week on Wednesday core CPI coming out. Also, Fed Chair Powell testifies on his semi-annual testimony to Congress on Tuesday and Wednesday. So we'll be seeing what he has to say with it. Obviously, what shook the market up was new Trump tariffs announced that they're coming out reciprocal, as the president called them. In other words, he's going after who knows who, but Europe is probably in the crosshairs there. Not really Mexico and Canada, because he gave them a reprieve until month end. We'll see what they have done. Is it enough to get the president happy? Japanese, I don't know what's going to happen there in Japan. And the reason is we saw the prime minister with President Trump. He went, and today I was listening to the prime minister in some speeches he had given just recently now, as he's back in Japan. And he thinks that maybe they've done enough to placate the president for the time being with the investments that they're making. They've backed off on buying U.S. steel to investing. They would like the ability to invest. You can't stop that. If they wanted to come in and buy in U.S. stock, they can do that. Obviously, controlling interest, and then they have control of the company. That could be a problem, but it sounds as though that's not where they want to go. We'll see. But they have been throwing a lot of money. A huge plant's just opening after a $14 billion investment in battery-making plant in America. It's about to open, so that's a lot of new jobs, too. All right. So as we look at the gold, as I said, on a monthly basis, you're up about 2%. Let me come back over here. And on a weekly basis, you're up about the same. The week and the month all began on the same day. It's not always that way, but it worked out this time. As you can see, new all-time highs in the market. As you can see, running to the upside. Now, I don't know if you move gold into the United States, if he's going to put a tariff on that. The copper market exploded on Friday as traders are convinced he will put tariffs on copper. And if he does, that adds to that cost to the market, so they jump accordingly in their price. You would say, oh, well, that means you don't need as much. It doesn't work that way in certain of the base metals. You have to use it if the economy is going to keep going. Gold also a recipient of that. You can see how the markets come up, but I'm telling you, you always watch where Bollinger Bands are. Markets can run them for a while, but they inevitably get a correction, and that's what you want to wait for. You want to wait for the pullback in here and come into the market off the correction if one is offered. If it isn't, okay. You don't want to be bearish on this pattern, in my opinion, but I teach you don't buy over the black dash line because you only stay over it 5% of the time. You can run the band. And I call that the gorilla glue trade when you latch on. This is all explained in my course on how to work with this as I tie all this with momentum in the chart. So at the end of this, take a look, give yourself an advantage. Take your hands from behind you, put them in front of you, learn the technique. You don't have to apply it. I think you will, but learn the technique so you understand why markets stop at certain zones so often. When you look at the gold-silver ratio, long-term, gold is still stronger than the silver. Remember, this is a weekly chart. All year so far, you've been over the 18-week average. I would look for resistance in silver at the upper Bollinger Band if you can get there. That number's around 33.63. It is not overbought. It can easily ply up there. And look where copper went to and stopped on Friday. Now, you have to admit, why did it stop there? This was called the Gorilla Glue trade. And what I just said about gold, that's what I was looking for that could happen. And while this market continued down, I don't think that'll be the story in the gold market because of the inflation story that we have that is still very much at work. And that is the key. The Fed can't seem to get that inflation down to the 2%. It's not their fault. And their tool to do it has to be keeping interest rates high for that to happen on a relative basis. In the copper, this all came alive because if the tariff goes into copper, and copper's been talked about as one of those, watch out. Plus, as you know, there's been a huge difference of gold in the LME price and copper in the LME price. It's the question, can you get those goods here to deliver on them? Well, if he puts on these tariffs, it just got more expensive. Platinum, right up to the upper band and stopped as well. I'm going to keep saying this to you. Learn to work with this. You hear me talk about it. It isn't an accident that I talk about it every single day. Got up there, backed off. Now, I'd be careful in the dollar here. You lost your bullish momentum. You could easily pull back to the 18-week average of closes, 106.57 roughly, and see what the market does there. But the dollar lost its impetus to the upside, and it's been happening now for a month. You peaked out, and you can see this is a weekly chart, and the market is definitively backed off. Could it go up? Of course. Am I bearish? No. I am bullish the dollar as long as our rates, interest rates, are relatively stronger than others, and our economy stays as strong as it is. That combination does not put me in the bear camp for the dollar. Corrections? Yes, they happen. New Trump administration? Yes, it's here. Impacts on the dollar for sure. Which way? Well, that's what the market charts are starting to tell you. So I'm going to repeat. One of my favorite tools is the enhanced Bollinger Band course that I created. It mixes how to work with the standard Bollinger Band along with the slow stochastic study. Very important. Very important. It's not just the band by itself. It's momentum with the band. How often are you watching CNBC, Fox, Bloomberg, and they're saying, we have momentum trades at work? How do you work with that? How do you know where they might go? Where's the resistance points in the market? That's what these videos teach you. You get our charting software, 14-day access to my morning subscriber videos, all put together for you. Call 866-973-2077 or go to iraepstein.com education. You can sign up right online. There's a link up here you can go to. It tells you all about it, explains how the course works for you and where you go with it. I think once you start employing it, you're going to go, where have I been? Why didn't I understand that? You have yourself a good day. I'll catch up with everybody Monday.